Hello, dear students. I'm K. Banmati. Today we will see an important topic in income tax, the residential status of an individual. Now, we will see a brief on Indian tax system. First, what do you mean by tax? Taxes are generally an involuntary fee levied on individuals and corporations by the government in order to finance government activities. So it's an involuntary fee, okay, so which is collected by the government from the public. Okay, next. Why does government levy taxes? Taxes are the largest sources of income for the government. This money is deployed for various purposes and projects for the development of the nation. So, it is used for the development of the nation. It is used for improving the infrastructure of the country. There are two types of taxes in India. It is subdivided into two. One is direct tax and the other one is indirect tax. Now, we'll see how the direct tax works. Direct tax is paid by the person directly to the government. It is paid by the individual who earns income and it is paid directly to the government. So the liability falls on the direct person. For an example, income tax is a direct tax. An individual or in a corporation or in a firm which earns income pays its tax directly on the basis of its income. Now, what is indirect taxes? A person will pay to the businessman, and the businessman, on behalf of the person, will pay to the government. For an example, goods and service tax is an example of indirect taxes, which is popularly called as GST. Now we will see what is a person. We saw the word person in direct taxes and indirect taxes. Then what is a person? According to Income Tax Act, Section 231, a person can be an individual, it can be a Hindu undivided family, or a company, a firm, an association of persons, or a body of individuals, or a local authority, or every artificial judicial person. Person here, it indicates an individual or a Hindu undivided family, a company, a firm, or an association of person or a local authority. Okay. So now we'll move on to residential status. As per the provisions under Section 6 of the Income Tax Act 1961, it has well explained on who has to pay the tax. Under, under that, we are going to see the residential status of an individual. Why to determine the residential status? Why we should know what is the residential status of a person? Tax is levied on total income of assessee. Under the provisions of Income Tax Act 1961, the total income of each person is based upon his residential status. Then now we'll move on to residential status. Residential status of a person depends upon number of days he had physically stayed in India in the previous year. Okay, the residential status will differ according to the stay in India. Nothing to do with citizenship. So, for an example, an Indian who is a citizen of India can be non-resident for income tax purpose, whereas an American who is a citizen of America can be resident of India for income tax purpose. Now, see, an assessee is first we'll see how the residential status is subdivided. For at the first level, now we are going to see only for the individual assessee. For an individual assessee, is subdivided into resident and non-resident. If an assessee satisfies any one of the two basic conditions, then he becomes a resident. If if he doesn't satisfy any one of the basic conditions, then he will become a non-resident. Okay, so he should satisfy any one of the basic conditions. Then what is the basic conditions? See, an individual is said to be a resident in India if he satisfies any one of the two basic conditions. Now we'll see the basic conditions. The first basic condition is stay in India during the relevant previous year for a period of 182 days or more. He should stay in India in the relevant previous year. For for us now, the relevant previous year is 2022-23. In that 22-23, it starts from 1st April 2022 to 31/3/23. Now, in this, he should stay in India for a minimum of 180 days or more. Then he satisfies the first basic condition and he becomes a resident. Okay. Now, what is the second basic condition? Stay in India during the relevant previous year for a period of 60 days and 365 days or more during the 4 years preceding the relevant previous year. What do you mean by 4 years preceding the relevant previous year? What is our previous year? It is 2022 to 23. Before that 4 years, that is 21-22, 20-21, 19-20, 18-19. In these 4 years, he should stay in India for minimum of 365 days. Then he satisfies the second basic condition. So to become a resident of India, he should satisfy any one of these basic conditions. Next, there are exemptions in residential status. What is that? An Indian citizen and who leaves India in the previous year for the purpose of employment, and if an Indian citizen or as a person of Indian origin who's being outside India comes on a visit to India in the previous year, for them, they have to satisfy only the first basic condition. If they satisfy the first basic condition, they become a resident, else they become a non-resident. No need to consider the second basic condition. Now, when an individual becomes a resident, now we have to check whether he is a ordinary resident or not ordinary resident. Yes, see here, additional conditions. To become an ordinary resident, an individual should satisfy both the additional conditions. Okay, he has he has been what is the additional conditions? First additional condition is he has been resident in India for at least 2 out of 10 previous years immediately preceding the previous year. Okay, other than previous year, before the previous year, in the 10 years, he should be a resident in India for at least 2 years. And the second basic condition is he has been in India for 730 days or more during 7 previous years immediately preceding the relevant previous year. So to become an ordinary resident, he should satisfy both the additional conditions. If he didn't satisfy any one or none of the additional conditions, then he becomes a resident and not ordinary resident. See, now we will understand this with a example problem. The first problem is on 1st June 2020, A B and a Malaysian citizen left India after continuous stay of 10 years. During the financial year 2021-22, that is our previous year 21-22, he came back to India on 10th October 2022 and stayed here thereafter for 1 year. Determine B's residential status for the assessment year 2023-24. So what is the assessment year? It is 23-24. Our previous year is 22-23. Now, determination of residential status of Mr. B. Assessment year 2023-24 and previous year is 22-23 as I said. Now we have to check whether he has satisfied any one of the basic condition. First one is stay in India during the previous year. First we have to check how many days he stayed in India in the previous year. It starts from, because he landed India on 10th October 2022. We have to include the day when he entered India and the day when he leaves India. An individual enters India and leaves India. So it starts from 10th October 2022 till the end of the financial year, that is 31/3/2023. So he stayed in October, he stayed 22 days. We have to include even the 10th of October. So October has 31 days, so it becomes 22. And then October 22 days, November 30 days, and December 31, January 31, February 28, and in March it is 31 days. So totally he stayed in India for 173 days. So what is the first basic condition? He should stay in India for 182 days or more, which is not fulfilled. So we have to move on to the second basic condition. Stay in India during 4 years preceding the previous year. In the previous year, he should stay for 60 days or more. That is satisfied because he stayed in India in the previous year for 173 days. So 4 years preceding the previous year, we have to check how long he stayed. In 2021-22, he stayed for 46 days. In 2021, he stayed for 62 days. In 2019 to 20, he stayed for 365 days. In 1819, he stayed for 360 days. So the whole year he was in India. As he left India on only in 2020. Second basic condition under section 6.1 of 60 days stay in the previous year is satisfied as he stayed for 173 days, and 365 days or more in the preceding 4 years is satisfied. Therefore, Mr. B is a resident. Now we will move on to the additional conditions. When B becomes a resident, now we have to check whether he is a ordinary resident or not ordinary resident. What is the first additional condition? The additional condition 1 of being resident for 2 out of 10 years preceding the previous year is satisfied since he left India only on 1st June 2020. He is a non-resident for the previous year 2021-22, but resident for all the preceding years. He was a non-resident only in the year of 21-22 as he stayed only for 46 days. Only in that year he is a non-resident. Other than that, he is a resident in remaining all the previous years. Okay. What is the second additional condition? Stay for 730 days during 7 years preceding the current previous years is also satisfied because of 838 days of stay in the previous 4 years alone. Yes, he satisfies even that. Why? in the 4 years preceding the previous year, he stayed for 838 days, which is more than 730. So he satisfies even the second additional conditions. As Mr. B satisfies both the additional conditions, he become a resident and ordinary resident under section 6.1 for the assessment year 2023-24. Are you clear? Now I think you'll understand how the basic condition and additional condition works to identify a person's resident, to identify an individual's residential status. Okay. Now we'll have a brief about the residential status of Hindu undivided family. Resident. If the control and management of an HUF's affairs are situated wholly or partly in India during the relevant previous year, the HUF is a resident in India during that year. What do you mean by that? The control, if the control and the management of its affairs is located wholly or partly in India, then the HUF becomes a resident. If the control and management is wholly situated outside India, then it becomes a non-resident. Now, to identify whether HUF is an ordinary resident or not ordinary resident, we have to check the residential status of Karta. HUF is resident and ordinary resident if Karta satisfies any one of the basic conditions and also satisfies both the additional conditions. HUF is resident and not ordinary resident if Karta satisfies any one of the basic conditions and also satisfies any one of the additional conditions or none of the additional conditions. So therefore, Karta's status will decide the HUF's ordinary resident or not ordinary resident. Okay. Now we'll see the residential status of association of person, firm, or body of individuals. If the control and management is wholly situated in India, then it becomes a resident. If the control and management is wholly situated outside India, then it becomes a non-resident. Okay. So what is the residential status of a company? For Indian company is always resident in India. Indian companies are always a resident in India. Then what about foreign company? If control and management of its affairs is wholly situated in India, then it becomes a resident. If it is wholly situated, partly or wholly situated outside India, then it becomes a non-resident. Till now, for an HUF, firm, BOI or AOP, we saw that if the management and control is partially situated in India, then it becomes a resident. But it is not so in the case of foreign company. In a foreign company, if it is wholly or partially situated outside India, then it becomes a non-resident. However, a foreign company it is treated as non-resident if during the previous year whose turnover or gross receipts in the previous year is rupees 50 crore or less, then it becomes a non-resident. Okay. If the return is more than 50 crores, then it becomes a resident. Are you okay? This condition is only for a foreign company. Okay. Thank you.